So we're going to talk about the triple double strategy here today. This is a strategy that I've went over before, but I kind of want to reinforce it here. So I want to take some time to uh, go over the triple double strategy. So two things right now, particularly with the triple double strategy. This is a three-layer options and equity system. So this is going to goal is going to help you profit from the downside. Number two, generate income. And three, accumulate more shares. So this is a strategy that many of our community members who have been in the program for, I would say, about at least 5 years have actually heard me go over numerous of times. And this is a great strategy to use when the market is coming downward because it allows you, you're basically using three strategies and it allows you to pretty much double up on your shares. So that's why we call it the triple double strategy. So you have the ability to profit from the downside by buying puts. Two, generating income through selling options. Three, accumulating more shares. That's why we call it the triple double strategy. Really, number one, buy puts during the downside volatility. Number two, selling calls. Number three, being able to accumulate more shares for long-term growth. The objective is to capitalize pretty much on every market phase. We understand that not going to always be up. It is going to be times where it does pull back down. But utilizing this strategy can help you to hedge. So step two, really select really only high quality equities, in my opinion, to utilize this strategy for. Because if you're using this, for example, on a, I'm always taking digs at this name, but if you're using this on a name like OKLO, it's probably not a smart idea because yes, you could profit from the downside, but it is probably going to take a long time for OKLO to come back upwards. Right. So what I would stress is, particularly if you are going to utilize this strategy, let it be on companies that actually makes sense for you to utilize it on. So you do have, particularly here, two things that I want to discuss and go over. I used a couple examples like Oracle, AMD, NVIDIA, Microsoft, Apple, just as good, strong examples. Now, requirements: strong institutional ownership, a daily volume, active options chain, and clear technical structures, right? So utilizing this strategy, for Oracle's case, right? We've been trading puts to the downside to do what? Collect money, a little bit of dollars here and there. Some of us may have already had an Oracle position, so you've probably seen that Oracle position maybe reduced. But you want to pick up more shares. Here's the thing that can really assist and help a lot of people be able to pick up more shares as the market is coming downward is now you're buying puts. So you're making a little bit of profit by purchasing put options to hedge, but then you're also selling out the money covered calls. So this works well when a stock is in a free fall or in a nice profit taking range, right? It also can work well even when the market is going a little bit sideways and you have some slight move to the downside. You're selling those options and you're wanting to accumulate more shares. Step three is you always have to analyze the market conditions, evaluate the broader market conditions, look at SPY, QQQ, and the VIX. Of course, DIA as well, too. That's the index that you're trading those stocks within there. Determine if the market is trending down, consolidating, pulling back from highs. This helps determine, obviously, timing for puts. We talked about the VIX numerous of times. We talk about the VIX every week. But specifically last week, we talked about the VIX breaking back above 25 and how we would see the market actually pull downward. So now we're looking at probably on Monday's open, where we're more than likely going to see the VIX probably shoot up all the way to, we might even break past on the VIX more than likely. We'll probably end up breaking past 30 by the time the market opens. Whether it stays above 30 or not, we'll see. But we're going to speak about the VIX and when it's best time to as well sell puts, all right? Technical analysis, review your chart structure, support levels, resistance levels, trend lines, your moving averages. So example, Oracle is if it's rejecting resistance around $150 and you decide to sell an out the money covered call at 160, 170 strike, you choose to sell that out the money call for 1 to 2 weeks, etc. You collect that premium. And then if it's going to reject, it's going to pull downward. So now you're using two strategies, right? The triple double strategy is very simple. You're selling an out the money call, you're buying puts, right? And then as well, you're looking to go ahead and buy more shares, right? Now, what's going to be a question that someone ends up asking, right? And we'll get to it in a second. But you buy puts, you purchase 2 to 4 months out. You prefer in the money, right? Or very slightly out the money, but we really prefer in the money. So for example, if Oracle's trading at 150, someone buys maybe a 145 put expiring 3 months. That's a little bit slightly out the money, not a bad thing. So they buy that put expiring and they set their downside targets. Right? Monitor the downside. Example, if Oracle drops from 150 to 142, the put contract is going to increase in value. Take the profit when your contract hits your target. So 142, your target, you get out of the trade, cool. You keep that money. Now, another example, right? Identify stabilization zones. After a decline, what do I always say? The stock is often to stabilize near support, right? Or you're probably going to make a lower high. Once you make a lower low, what comes after that lower low? You got a lower high. So lower low, lower high, lower low, right? Lower high, lower low, lower high. So example is AMD drops from 195 to 187. This becomes a potential accumulation zone, right? Because the stock hits and stabilizes at that support and may bounce off. So in this example, you begin starting buying shares gradually, you purchase 100 AMD shares in this example, right, at $187. The goal is to build a long-term position in a strong company, right? So in this example, if that is, that's your specific stock that you want to target, you could as well sell a CSP, a cash secured put. So it's best to sell cash secured puts when the VIX is high, because when the VIX is high, premiums get more expensive. So it always is better for you to sell option contracts, particularly put options, when the VIX is a lot higher, because you're able to go ahead and do what? You're able to go ahead and keep and collect those premiums. So it's never a bad thing, for you to actually go ahead and sell put options when the market, once again, is in a high stake scenario like that. So it makes a ton of sense for you to do so. When the VIX is once again higher, it allows you to go ahead and once again you sell those options out. You're able to go ahead and collect that income, to sell that cash secured put. Now, once you own those 100 shares, now you're able to go ahead and do what? Sell some covered calls, right? So now you can sell some out the money covered calls, generate yourself some income. You already know you own the stock. You choose a desired strike, preferably at least 3 to 4 strikes out the money. Helps you, keeps you a distance away, because at that point, you have to have a major move that's going to, take the stock price usually upward in order for that strike to actually get hit and the stock to be above. But be mindful with that. When selling covered calls, it's best to do so when really the market, after market has pulled back and it creates that lower high, it's best to sell, right, covered calls on those green days. So if you ever notice, like you paid attention to this week, the VIX, when it went down to 20, that was really the best time to sell those covered calls, because notice how much of the equities pulled back on Thursday and Friday after that. So Wednesday ended up being the best day for you to sell. So when you get these green pops and you end up forming lower highs, that's the best point to go ahead and sell out the money covered call. Because now not only are you taking advantage of that call option increasing in value that you're going to go ahead and sell, you're also creating some distance where now if the stock's at 200 and I sell a 210 or 215, right, out the money call, but then the stock drops to 190, I've now created $20 worth of distance between that strike going in the money versus out the money. So if you're looking at the mathematics part of it, it makes a ton of sense to sell covered calls on green days, right? And it's kind of, you got to really reverse your psychology, because it's kind of hard to, when you see a 300 point day or 600 point day, a 300 point day on the Nasdaq, a 600 point day on the Dow, and a 100 point day on the S&P 500, for you to really rationalize that, hey, this thing could give back half of these gains tomorrow, right? But that's what you have to look at, especially when the VIX is at a higher margin right now, breaking over 25. Then plus you got all the things that's happening in the Middle East, bomb here, bomb there. You know, Iran's going to retaliate. How this whole thing is going to end, it's just going to end with a ceasefire. These two sides are going to continue to bomb each other. Iran is going to continue to bomb, right? Israel. Eventually, somebody's gonna whoever gets tired first, they're gonna want to come and make a peace deal. This, to me, this thing is not a long-term situation where it's going to escalate, in my opinion, to being a long-term thing. I think they're going to come to a ceasefire, and the markets will love it. The day that happens, the Nasdaq is going to go up 2%. Very simple. So we've seen this back and forth over and over again. This is just another one of our, you'll add this on to the chart of reasons to sell, right? In the past 15 years, the markets be just fine. That's why you don't really see much of an overreaction. You do see it from oil, but at the end of the day, we understand why. Oil is a supply and demand situation. So, you know, a lot of your supply gets cut off. What happens to prices? So, Federal Reserve interest rate decision, you're going to hear questions that's going to come out. Probably the first question, once the Federal Reserve goes ahead and has their interest rate decision, the first question that's going to come to them when JP steps to that press conference, right? First question, what do you think the actions over in the Middle East have an effect on inflation for Americans? Boom. First question about gas prices. First question about gas prices. That's going to be the first question out the gates. So we'll see how long this thing lasts. In my opinion, this is over before the summer. You know, this is over probably even before April, before the next interest rate, before the next earnings season comes out. So it might not even make it all the way for companies to start being asked, how does this impact them getting copper, cobalt, and all of that, especially when we start thinking about EV companies. I mean, how all of that factors in as well, too. So that's just really my thoughts. But what this does provide you is a great opportunity to buy. That's what it provides you. All of this provides you a great opportunity. If the market flushes a few days and the NASDAQ is able to actually get to this correction zone at 574, so be it, right? You don't get corrections every day. So you don't also get corrections every year either, right? It's very hard sometimes to get a correction. So these set you up for that next 6-month run, right? A lot of times in the moment, it's hard to see it. Just like I said, it's hard to see sometimes the market pulling back after a major green day, but you have to switch your mind to say, hey, what's next? What was actually formed here, right? Possible outcomes for covered calls, right? Stock remains below the strike price and you keep the premium. The stock rises above the strike price and the shares are sold at a profit. Most scenarios would produce a positive outcome, right? So let's go ahead and break this thing down. So what do we mean by that? You know, if the stock remains below the strike price, how do we actually go ahead and benefit and profit from this, right? So two things that I want to go ahead and actually make note of. So first thing that I want to make note of is, right, if the stock remains below the strike price, you keep the premium and the shares. So if you sold an out the money covered call for 250 and it was at the 210 strike, you were able to profit $250. You keep the shares, right? And you keep the money. If the stock rises above the strike price on expiration date, so that means on expiration date on that Friday, if the stock is above 210 and let's say it's at 215, your shares will be sold at 210. And then as well, what ends up happening is you still keep the premium. Now, what's the ways that you can avoid scenario 2, right? The shares being taken, right? Because you may just say, all right, I lost on this covered call, but I don't want to lose my shares at this specific strike. you could do, you can go ahead and now simply just go ahead and produce for yourself go ahead and now be able to just take profit. You don't have to take profit. You could, right? You could end up taking profit on the shares if you so choose, but that's really up to that's really your prerogative. But the easiest thing to do is to just buy to close the option back. So the option that you sold to open, you BTC it, you buy to close it, right? So if you notice that the stock price before expiration date, you're like, all right, I sold this option, at 200 I sold this option when the stock was at 200 and I sold at 210, but now the stock is rising, right? And you want to go ahead and, go ahead and sell that specific option. What you can go ahead and easily pretty much do is now go ahead and just sell a covered call. Right. So you could just easily just go ahead and sell a covered call. Right. Again, now you sold that covered call again. You put that out a little bit further, 2 weeks, and boom, you try again. So you could easily close the option before, take the loss. If it's at 205 and you're like, okay, I think it's going to break above 210, let me just go ahead and get out. You could buy to close it at any time. So anytime you sell an option, you don't have to wait until expiration day. That's something whether you bought a call, I'm assuming whether you sold a call or you sold the put, you can always buy to close it before expiration date. But that's one of the main questions that I always get is, do I have to wait? And the answer to that question is no, you don't have to wait. You do not have to wait at all. You do not have to wait. You can always buy to close it beforehand. Yeah. Mm-mm-mm-mm. Any questions specifically there? Questions on that. Mm-mm-mm-mm. Correct. That means you bought the shares at a lower cost. Correct. Is this assuming that you bought the shares at a lower cost? I get losing the shares and keeping the premium. Correct. Yep. That means you bought the shares at a lower cost. Yes, ma'am. Mm-hmm. Mm-mm. Any other questions? Do you see Microsoft making a lower low soon? We'll talk tickers in a second. Any other questions about what we went over so far? Questions about the things we went over so far. When you do this, what you determine how many shares. Well, you have to have 100 shares to sell a covered call, or you have to have the cash to own 100 shares to sell a cash secured put. But you determine how many you determine how many strikes you want to sell. Like if you got 200 to 300 shares, you got 300 shares, you don't have to sell it on all three. You can decide, hey, I'm just going to choose one. Uh, so now, once you have profited from put options, selling call premiums, now it's time for you to actually go ahead and additionally go ahead and invest. What's the range of the delta, right? Is very, 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 very important. What's the range of the delta for recommended covered calls? Well, usually if you're selling your strikes out the money, your delta should be less than 30 cents usually. Right. So you're really more so if you're looking, usually your delta is going to be probably less than 30 cents. So selling less than 30 cents, 25 cents deltas is probably really good for you. Really good for you. And that goes in line with selling like 2 to 4 strikes out the money. Right. Because some options have $5 increments. Some options are going to have, $2.50. So if you have options that are $2.50, you should probably go 4 strikes out the money. You have options that are separated by $5. You should probably go at least two or more, 2 to 3. So example, if a stock is at 200, I should be selling at 210 to 215. Very easy to note that down. Yep. Mm-mm-mm-mm. Are there cheaper stocks you recommend to get 100 shares that's less than $30? Not right now. Not right now, in my opinion. Not right now. No. Not really any equities that I see right now that are less than 30 that I could recommend getting 100 shares of. Not right now. Still with SoFi, I wouldn't recommend it. Not right now. SoFi at $10, then we'll have a conversation. So SoFi at $10, we'll have a conversation, but not right now. Not right now. All right. So equity purchases that you're able to go ahead and scale in gradually. Always control the risk. So you put trades, right? You could put the trades in 10 to 20% stop losses if you want to do, particularly for your put options. If you want to be able to make sure that you're keeping your risk tight, that's something that you could do. But that's your risk tolerance. Once again, your risk tolerance is your risk tolerance. All right. This is just an example of what I think is super good. 40% equities, right? Example of this type of, if you want to have a specific portfolio to do exactly this or what I'm highlighting, you have 40% of your equities. Now you're actually going to be able to go ahead and have 30% of your options trades and then 30% of your income strategies. So if this is a strategy that you want to employ, it probably is very good for you to maybe have, a set amount that you're willing to expose yourself to. But this is just a good mathematics, helps you to be able to, pretty much divide it up. Yeah. So once again, the triple double strategy, this system produces 3 profit streams: 1, put options from the downside moves; 2, call premiums from income strategies. Then you have also as well long-term equity growth. And then also the goal is to consistently build wealth through multiple market conditions. So that's the goal particularly here. Yep. Any questions? Questions, questions, questions. Any questions? Questions, questions, questions. Was this easy for everybody to understand the concepts and the principles of what to exactly do? But I'll show slide 14 again, no problem. So pretty much always control your risk, never sell below your cost basis. So for covered calls, what I'm essentially saying is if you have a specific strike price, you want to make sure that for your covered calls, never try to lose below your cost basis as much as you can possible. That's why I said do it on quality companies. Don't be just doing this on, I made a dig earlier at OKLO, because there's going to be some companies that you try to do this on that truthfully, never going to come back. So I would trust everything that I said today with the big dogs and companies that have actually proven themselves. Don't be trying this on OKLO. Don't be trying this on IONQs and all of that stuff. You'll profit from the downside for sure. But I would definitely say that it'd probably be better for you to, and it'd probably be better. I know there's some people that are saying, hey, well, I don't have the 100 shares. Well, you could just make it simple. You just do the double double. Double double is very simple. All you do is take away the selling options piece and you buy puts during the downturn and you buy more shares. Use 2 strategies to be able to double up on your positions. So if you know you're not in a position to sell cover calls or to sell any options, right? Buy puts and then accumulate shares, implement the double double. So the triple double strategy Three different three different objectives, one goal to be able to double up. The double double strategy, two-step system. Still, the goal is to double up. You're just removing the selling calls part or income. So that's really everything. Yeah. Yeah, and don't do this on leverage products either. Thank you for that, because I know someone was probably thinking about that. Thank you for that. Yeah, so don't do this on Kano. Don't do this on MSTU. Don't do this on none of those. Save these only for proper equities. All right, singular equities. Yeah. Mm-mm. All right, we'll replay. I got most of it for sure. We'll make sure that's available. What's the minimum balance to do the triple double strategy? I mean, I wouldn't say that there's probably a minimum balance per se, but in order to do the triple double strategy, you obviously have to have 100 shares of at least one or two equities. You obviously have to have some free cash to be able to buy some puts, and you got to be able to go ahead and be able to buy more shares. So I mean, I'm just you look at it depends on the equity, the conversation. So, we could be having a $20,000 account balance conversation. We could be having a $40,000 account balance conversation. Really is going to depend upon what specific ticker it is. You might have an AMD, which is close to $200, but you may as well have a Oracle, which is less, right? Or you may have a Marvel Tech, which is less. You may have a Palantir, which is less. So it really depends on, once again, the specific equity, right? That would really determine the conversation. So, yeah. All right. That was today's lesson for today. But let's get into it. So, whoever asked me about Microsoft, me and you are on the same wavelength this morning, because Microsoft is actually going to be the first ticker that we cover here today. So you asked me specifically, do I see Microsoft potentially making a lower high? The only way that I see Microsoft really rejecting, it could be up here at like 417 again. Know that MSFT has been running as of late since they bottomed. I'm not really worried about Microsoft until they get back below 400. So I think as long as they stay above 400, I think they'll be just fine, my opinion. I think that would be just fine. Microsoft's regard. I want to talk actually about Oracle real quick. The Oracle is getting ready to report their quarterly earnings. Go single. But obviously, this downturn on Oracle has not been easy at all. Oracle, it's back here to a level it hasn't been at. Just wanted to take this is a monthly demand zone. So the last two instances that we've been down here, the 24th, 2024 of August, and then as well April of last year, we have reversed. The only ways that I see Oracle breaking downward is if we get below that 135. So for people that have asked me about particularly Oracle long-term investing wise, you guys know the answer. We've only beat it in everybody's head the past 3 months of Oracle wanted to get it at $100 to $120. But just like I said with Netflix as well in the 70s, right? This is not a bad price to pay for Oracle, right? If is this a perfect price? No. But this is not a bad price at all. We like Oracle at this range. We think it makes sense. We're not mad at, being able to pick up Oracle at these levels. So we think it does make sense for you to go ahead and pick up and grab. So we like Oracle at this point. The Oracle, um, it's not a bad price. It's just not a perfect price. The same thing I said yesterday and before. If you want to take a shot here, I wouldn't buy any options, but I think it's worth buying a few shares. That's just my thoughts on it. I think it's worth buying a few shares. So those are my thoughts on it. Do, do, do. Next, I want to talk MU because I think that MU is going to have one of these down weeks. So I want to explain this really quickly here. I really want you to watch MU this week underneath 365. I think there's a chance you see potentially a $30 to $40 move to the downside for Micron Technologies. So a break below this 365 is going to push us down to 352. And then after that, 346. And it leads us there to about 330. So there's a chance that if the market continues to accelerate downward, MU could break this low from February's low. So if they break last month's low, MU is going to trickle down to 352 and then 346. So this is definitely for my day traders and my short term traders as well. This week, keep your eyes peeled on ticker MU. I posted that in the chat. So as the VIX continues to maybe elevate, you could see some profits being taken consistently here on this name. I did notice that ASML, TER, TSM, as well as SanDisk all fell on Friday. So there is some weakness there. TER, ASML, you have as well TSM, and then you have SanDisk. All of these companies within relatively the same sector. So I am expecting also my baby fell, NVMI as well fell 6%. So she was down as well too. So you do see some profits being taken on a lot of these names, and this very well could continue. So NVMI, kind of same setup, right? Getting below the February low. So keep your eyes here on 395 and as well as 375 for NVMI. You could see another little $25 get wiped off the board of this bad boy. So you got MU, ASML, SNDK, right? It looks like the semiconductor industry, TSM as well, got below 350 last week. Let me show TSM. They're back to about 340. Same kind of setup and situation. So look for TSM potentially get below 332 and head towards about 321. Also as well, NVIDIA. You see how we're kind of seeing, I just named 7 stocks that you virtually see the same setup. But I'm going to talk about NVIDIA, right? Because a lot of questions come in always. 174 is where it's likely to go this week. What it does after that, it could go to 169. I wouldn't be surprised to see that. But we have not been able to see NVIDIA really get crushed below this 169. So I'm not a believer in NVIDIA falling for too long. I'm not a believer down here, right? So the only way, once again, I'm going to highlight this so everyone knows, the only way that NVIDIA really starts to shift is if it breaks below this 164. That is the kill zone level for NVDA. We've highlighted that numerous times over the past few months, but that is the kill zone level for NVIDIA is right there below that point. So if we can get a move and where NVIDIA breaks and drops, that is where the level is going to be. Kill zone level. So hear me carefully. NVDA needs to get below 174. Once again, 174, right? And then after that, 169, the kill zone will be 164. So until you get below 164, it's all fun and games. It's ping pong table action, as you see. NVIDIA has done virtually nothing. So I'm not a believer that it gets below there. That's just my thoughts. I think it'll end up by the time whatever happens, by the time it's even to get down there, it'll end up reversing right up out of there. So those are just my thoughts. Those are just my thoughts. Right. Next, I want to showcase a couple more things. I want to talk about Alibaba and as well Google. So ticker BABA. I want to point a couple things out to you. I want you to look for Alibaba to come downward below this 130 this week. Alibaba, once again, is a after hours mover because the Asian markets really move Alibaba. You made a lower low, you proceeded to make a lower high. So now to make a lower low, you got to go below 128. So this week, it'll probably happen after hours, of course, because Alibaba's an after hours mover. I think that you'll end up seeing ticker BABA not Boeing, but BABA. I think you're going to end up seeing this name break this 128 and then ended up pulling back down all the way to about 122. So keep your eyes on BABA. Right. So I know some people are already shorting this names from about 138 all the way here down. So we did get that rejection. Baba pop made a lower high. Now you're looking for Baba to make a lower low. Most likely, what's going to end up happening, once again, is you're going to see the stock down probably $4, $5, $6, $7 overnight. The stock pulls back. You probably hit that STC button that opens, sell to close, and you probably get out of there. We're still the overall target is 117, but you got a couple of that 122 and then also as well 117. So those should be your two take profit levels for ticker BABA Alibaba. All right. You should have that down on your notes already. Now let's talk about Google. So two things with Google. Right now we're looking for Google to break underneath this 296 level, right? So Google, one or two things are going to happen here, and I'll go to the 4 hour. Either Google is going to end up reversing and making a DB, a double bottom, and reversing out of 296 and shooting back up to 306. So really watch this 290. If we don't get a close on the hour or the 30-minute time frames during the intraday, you won't see Google end up going to 292, but you could see a bullish reversal back up to about 306. So you're still kind of trading within the ranges here on Google, but that's my thoughts on it this upcoming week. We could have a DB double bottom pattern, ends up turning up to the upside for you. You got Google there. Next stock I want to talk about is AMD. AMD, advanced money destroyer. Anytime AMD starts coming down, that's the label we put on it. But it's really advanced money maker, AMM, because AMD's done some good stuff for us. But you look at AMD, two things here. 186 is going to be your key support zone. You made a lower high as well at 202. Currently at 192. We were just talking about semiconductor stocks coming downward. So if the selling pressure obviously does continue, I think you can look at this break below 186 for a move down to about 178. I'm still short-term bearish on AMD. If we can close and get below these levels, I want to see us get back to 178. So AMD to me is still a name that is likely to pull downward a bit more as we're getting closer to that 186. So look for that break. That break below 186 is really going to press and push this name downward. So AMD 186, it goes to 178 after that. My favorite company in the world. No, I'm just joking. But this is definitely not is not my favorite company in the world. But this is definitely a company that is on my do not like list. Right? And we've made some good money from OKLO, on the up and the downside. But I want to talk about the downside this morning. We've actually gotten below $58.69. I'm looking for us to take a move down all the way to about 52.12. You remember a few months ago, I told you guys that this would end up happening. And I expect it to continue. I see us going all the way down back into the $30 range. So we're going to start taking out these levels more and more. OKLO is going to continue to rotate downward. You got a bear flag break here on the daily, one of my favorite setups. So you're looking at OKLO pulling down to about $52, in my opinion, this week. It'll probably make a lower high after that before continuing any lower. So 52 will probably be your floor for the week, and they're probably bound to make a lower high before proceeding to go any lower. So OKLO, Ellie's favorite ticker. Now, don't say that because then people will run with it. But nonetheless, you guys know exactly what we want to highlight and talk about here with this name. You got Alibaba, you got OKLO, you got your semiconductor names like MU, you see AMD. That is where the bulk of the setup, I think, as well. Microsoft may pull back down to 400 to the person that asked, but that's virtually really, the bulk of the watch list. I want to talk about the VIX because the VIX is going to be very, very pivotal and important. At the VIX, which is currently right there at about 30, knocking on that door. So if we don't break through 30 very easily, the VIX retraces right back down to 25 and then 20 again. So you know what's going to happen. The market's going to end up reversing. The levels to pay attention to on the SPY and the QQQ this week are very simple. If you get this break underneath 670, you could end up seeing a move down to about 665. That's only if you get that break below this previous week's low. So you got to see a break below 670 for us to move down to about 665. And then after that, 658. So that's the only way. Now, buyers have shown resilience at this 670 level, really all the way back to November and December. So I'm not confident that the market is just going to easily flush below these levels. So let's say Monday morning comes, the futures are red, the SPY's at 665. Should I be hopping in any puts at open? No. You're going to see major intraday reversals. So to all my SPX players, right, I'm giving a green light to you guys. If the NASDAQ opens down 1.5%, 2%, right, and you end up seeing a major move, you buy the reversal. That's one thing that I want you to put on your notes. You buy the reversal. When the VIX is this high, always buy the reversal. So as the market as the VIX is getting up here to 30, 35, buy some calls. Buy some, I'm telling you. You better go hit up C. She's gonna be right in that reversal. Hit up Remar. They're gonna be right in that reversal. So very easily you could see the SPY drop to 665 and the markets opens at 665. Buy calls. It'll be back at 673, 674 by the end of the day. You're going to see some 10-point reversals, probably at least 1 to 2 days this upcoming week. You're going to see 10-point reversals. What do I mean by 10-point reversals? The market opens up 665, but then closes at 674, 675. That's what I mean by a 10-point reversal. So those are my thoughts. If you have that risk tolerance to play that SPX, you do that at your own accord. You don't want to become drunk in love with that, but you play that at your own accord, right? If you have that risk tolerance, if you got no business doing that, don't even touch it. Don't even touch it. Don't even touch it. So that's it for when we say high risk, you got to have the highest percentile of risk tolerance. You got to be 95% and above. You got to be extremely risky. Extremely risky. So if you know that's not you, don't even touch that. Don't even fall victim to it. All right. So those are my thoughts as far as the S&P 500. And then as well, the QQQ, the level's 592. Same level, 592. So until you get a break below there, I don't trust this thing. All right. I want to see it come down to about 574, in my opinion. That's where I want to see the Qs come down. I want a correction on this NASDAQ. I'm tired of this chop. I want NVIDIA to crush below 164. I just don't think it's likely, right? So there's a difference between what you want versus what's likely. I just don't think that we'll end up getting to that 574 on the NASDAQ right now. I think we'll probably flush, maybe get below 592. But I would be buying the reversal on any more of a drop. Like any more drop, buy the reversal. Market drops more, another 2-3%, buy the reversal. The reversal. That's the trade. Buy the reversal. Economic reports for the week. Here we go. We got Wednesday, which is going to be your CPI. It's going to come out, right, at 8:30. So you get your CPI. The questions about inflation, all of that stuff will be addressed there. But that'd be for the previous month of February. Also, as well, I can imagine that in April, when we end up getting the numbers based upon some of the price hikes that we'll probably see in this month of March, you might get a little bit of a higher reading, but nothing, in my opinion, that's going to, send things over the top. The PCE numbers are going to go ahead and come out as well on Friday. That's a delayed report. So that is the one from January. So you're getting on Friday, March 13th, a lot of January numbers that are coming out. So after this, we should pretty much almost be all the way caught up there. Right now, We also do on Wednesday, March 18th, you do have the Federal Reserve, excuse me, you do have the Federal Reserve interest rate decision, which is actually going to come out here at 2 p.m. So Wednesday, March 18th. Put that date down for yourself. Wednesday, March 18th, FOMC. JP will be at the podium. Earnings. Oracle moved their earnings the day back. So they'll be on Tuesday. They were originally scheduled for Monday, but they will be on Tuesday, right? This upcoming week. Yeah, Stitch Fix. You do have Dollar General, DG. You got Adobe. You got Rubrik. You got Ulta. You got Petco. You also as well Loan Depot. You also have Kohl's, Neo, Chronos Group. You have Dix. What's another one? UiPath that we'll be watching now. Bumble. All right. And yeah, that's pretty much it. The rest of these, no knock to them, but nothing I'm paying attention to super, 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 closely. Probably the two I'm most excited for this week is going to be, well, three: Oracle, Adobe, and Rubrik. Those three. And if we want it to be a fourth, it's Dollar General. Yep. Those are the ones I'll be watching the closest. DG, let's see if Dollar General, what they got cooked up. Definitely excited for Adobe. Adobe's at the best price it's been at in 5 years. So Adobe, Michael Burry announced he disclosed a small position in Adobe, which I think makes sense. Since then it's up to about 283. We bounced right here at that demand at 250. So it makes a lot of sense. It makes a lot of sense to start getting exposed into Adobe at these levels. I still would like a little bit lower, and sometimes that doesn't always happen. But it's not a bad price here in the 250s, 260s, 280s. This is not a bad price. This is a pretty good price to pay for Adobe. Let's see what the earnings do. If the earnings end up knocking it down a little bit. But yeah, around there, around 180 to 220, that's like perfection. Perfect, perfect, perfect. You don't always get perfect. But yeah, at 250, makes a ton of sense for sure. A ton of sense. So that is why the stock did turn around. So you got your VIX levels to pay attention to. So jot those things down. Discord real quick. Just a couple of announcements real quick. If you missed any of the classes this past week, you can come to the Beginner A to Z channel underneath Welcome. Catch up on the classes that you missed. So we got these Beginner A to Z videos. Make sure you're checking those out and watching those. Also, as well, I will be dropping the tickets for the in-person classes for Houston and as well NYC today. The tickets will drop today, so be on the lookout for the links there to make sure you register and get your tickets. The DC ticket link will drop within the next couple of weeks, so you be on the lookout for that. That's not until April. And then as well, Montgomery. Shout out to Miss Davis Frazier. She put this together. So we're going to give her flowers, longtime community member. So March 14th, that is next Saturday, 11 a.m. Central Standard Time. We'll be in the house in Montgomery, Alabama. Shout out to Dr. White. He as well is allowing us to have this seminar in his house of Montgomery City of Refuge Church. Very beautiful facility. We appreciate Miss Frazier for her consistent and always to wanting to get other communities involved. So this will be the second time that I've traveled to Montgomery to teach our community and other communities surrounding. So if you live in neighboring states and you would like to be in attendance, the event is completely free and available for you to come through. So that will be at 11 a.m. CST. So make sure you guys tap in with me on next Saturday, March the 14th. All right, so shout out to Miss Davis Frazier as well. So we appreciate you guys. Hopefully you guys have a great rest of your day. And we'll post this recording ASAP so you guys can be ready for the week. So, yep. Appreciate you guys. Y'all have a blessed one.